Hi, Deborah Borchardt here with Jim Cramer at Wall Street Confidential. Today we're talking about Chesapeake Energy.
Right.
It's one of our most searched stocks on our site, and I think that because they've had a lot of news lately.
Well, the news has all been good and the stock's all been bad. No, I mean, the decline in natural gas, and I own 3 of them for ActionAlertsPlus.com, and one of them is very small, but 2, Devon and COG, I'm building Capital Oil and Gas. I'm also building NOV. I have to buy them when they don't want them. The same way I built Morgan Stanley down to 30. I have to buy these things when I'm throwing them away because I'm taking a longer-term perspective. But here's the deal. Chesapeake is uniquely levered to the price of natural gas. The price of natural gas is falling from $13.50 to $9, where it was earlier today, now back to $10. It's fooling around because of hurricane, but the natural gas price has peaked too. And given that natural gas has peaked, and then natural gas is in relation to oil, and even though there's a big shift to natural gas away from coal, it doesn't matter. Chesapeake can't lift. Now, Chesapeake, every time Aubrey McClendon has bought stock, the stock has ultimately gone higher. I don't know whether he's bought stock today. He bought a lot of stock last week.
He's been buying a ton of stock.
Right, but my take is there's only been one instance where this has been wrong to buy, and that was a couple years ago, and ultimately it turned out right. These stocks are being thrown away as part of a larger trade, which is out of oil and gas, out of fertilizer, out of ag, out of anything alternative energy, and into companies that use energy. You'll see for every point the Chesapeake's down, you'll see Owens, Illinois go up. Or, maybe Celanese, which is what I'm looking at, which is down really badly, DuPont, Dow. So what you're getting is people are giving up, and they're giving up, and I see it, and they're giving up at prices that indicate that natural gas will be through 8. I don't think it will be through 8. Now, the last kicker in Chesapeake is that XTO, which is a really great company, is pricing something like 26 million shares as a secondary after the bell on hopefully on Wednesday today. Now, here's the thing you need to know. XTO is down from 75 to 48. XTO is every bit as good as Southwestern. So if Southwestern, I mean every bit as good as Chesapeake, and every bit as good as Southwestern, which is down really badly. I think that XTO pricing, coupled with natural gas inventories, which may not be that bad tomorrow, would lead to a bounce. But again, I want to reiterate that these stocks are only good long-term right now. Because they're being pummeled beyond belief. They're incredibly oversold as much as they were overbought. But Chesapeake, Cabot, Anadarko, Apache, these had all been winners, and they were all crowded longs, I call them, with hedge funds. They were all long these stocks, Chesapeake in particular, and they were short retail and short bank. And they're being squeezed on retail and bank, and they're being squeezed on Chesapeake. And it's an ugly situation that will not remedy itself for some time.
Okay, great.
I mean, you have to have the XTO secondary price. You have to see some stabilization in natural gas between 9 and 10. Because remember, these are reflecting 8.99. That's actually the level. They're reflecting 8. That was the long-term support for natural gas. The stocks are down much more than the futures price. So I think they're buys. They're obviously, I said yesterday, they're too painful. I reiterate that they're too painful for most people. But historically, they've been right here.
Okay, thank you, Jim. So it looks like it's a long-term hold for someone that's a little more risk tolerant.
Exactly right.
Great,
Well
and
put.
that's Chesapeake
Well
Energy.
put, Deborah.
Thank you, and stay tuned for more at thestreet.com TV.